Now friends, come to this particular question ID number 50. Somewhere in 2012, Mr. X purchased. So Mr. X has purchased. That year-wise calculation you have to do afterwards. Then you put to use on the same day, eligible for depreciation, transfer the machine to Y. So then Mr. Y is purchasing this particular machinery from Mr. X. So Mr. Y, what he is purchasing is a second-hand asset. Used asset. Okay. So since Mr. Y is purchasing a second-hand asset, Mr. Y, okay, because you have to do calculation for depreciation of X and Y, both of them. So we have to give a special treatment for the second-hand assets. Okay. Now thereafter, Y uses the machine for some 1 year or something like that, and he again transfers back to Mr. X. Okay. So now Mr. X is going to reacquire. He is going to reacquire that particular asset. So originally it was purchased by X, then it was sold to Y. So Y got a second hand asset, and then Y again sold it back to Mr. X. So Mr. X will be said to have reacquired that particular assets. Okay. So in this situation, we have to calculate this depreciation and all that. But before that, let me tell you that there is one section called as section 43.1. This section 43.1 defines the actual cost. It defines the actual cost of an asset. Okay. So let me just introduce that particular provisions to you. See, this is section 43. Section 43 has got many subclauses. So one of the subclauses is subclause 1. It says that actual cost. This is a definition of the actual cost. Okay. Actual cost which will be considered for the purpose of this entire chapter, because this is a general purpose definition. However, I am teaching you this definition with respect to depreciation, but it is general purpose definition. Okay. Now this actual cost of the asset shall be reduced by the portion of cost, if any, has been met directly indirectly by another person. So if your cost is met by someone else, that will not be considered. Your cost, you should meet the cost. So that will be the actual cost. And if there is any cost for which you have paid 10,000 rupees, exceeding 10,000 rupees in cash, just like your cash expenditure, this is a cash asset acquisition. So same concept, aggregate per day and kind of situation. So there is a 10,000 limit. So if you have paid cash to acquire the asset, okay, and if it is exceeding 10,000 rupees aggregate in a day, okay, so exceed 10,000 expenditure for this particular situation. See, assessee incurs expenditure, okay, payment aggregates to a person in a day. So same concept, okay. Then it will not be treated as a part of the cost. That means to that extent, it will not be the cost. So logically, to that extent, you will not have the depreciation. Logically, okay. So that will be the ultimate situation in this particular category, okay. Now, to this, there are a variety of explanations. Explanation 1, 1A, 2, 3, etc. Each explanation is a different situation, and many explanations are very simple and straightforward also. So there is no need to go into each and every explanation in depth, but somewhere what real that touchy points are there, that I will definitely cover it up. But each and every point, a very common sense point many times. Okay. So no need to go and touch into each and every point. But right now we have two definite situations. One is a second-hand asset. Okay. So explanation 3 says that wherever there is any second-hand asset, the second-hand asset, what will be the cost? Okay. So the law says that if the second-hand asset transaction is done, which is having a main purpose, okay, to reduce your tax liability, that means you are overinflating the costs. So X is selling asset to Y. Okay. So Y has purchased the second-hand asset. If the price is very escalated price, so that escalated price means escalated depreciation. Escalated depreciation means lower income, and lower income means lower tax. So if this price is unfair price, okay, this is what this particular law is trying to say, then the assessing officer may, with the previous approval of the commissioner, can consider the fair value as the cost. Okay. So in this particular situation, actual cost to the assessee will be such amount as determined by the officer. So such amount as determined by the officer means fair value. Okay. So what you have to do is you have to compare and you have to see whether there is any tax evasion type situations created or not. If such situation is created, then we will take the fair value. Is that very much clear? So, see, in the given circumstances, now let us start straight away with the working. So you will understand very, very better. Okay, see X, X and Y. Okay, X has purchased it somewhere in December 15 of a particular year. So 3 lakhs. Okay, on that 15% depreciation and half rate, because it is somewhere in December. Okay, so my depreciation out of 3 lakhs is going to be 22,500, and my the closing WDV is going to be 2,77,500. Okay, that is happening in a year which I'll call as a 12-13. Okay, however, these years are illustrative in the question. I'm going to always give the answer as per the latest law only. Okay, now it is eligible for it. Transfer the machine to Y on January 1, 2014. That means during 13-14, that means next year it is transferred to Mr. Y. Okay, so in the next year your opening WDV, this is your year number 1. Now year number 2. Year number 2, there is no asset acquisition, so straight away there is a sale price. So how much is sold for? 3,20,000. Okay, so what is Y is purchasing? Y is also purchasing for 3,20,000. Okay, but officer says that the fair market value is only 2,50,000. Is only 2,50,000. So FMV is only 2,50,000. Okay. Now comes the real application, that you have purchased a second-hand asset, because now you have to think from Mr. Y point of view. You have purchased a second-hand asset for 3,20,000 rupees, but the market value is only 2,50,000 rupees. So it is possible that you have overinflated the costs. Okay, so that you are going to claim depreciation on the higher costs. Okay, and so that you are going to reduce your tax, and so that you are going to reduce the tax liability. So in such a situation, the explanation can come into picture, and instead of your actual cost as 3,20,000, fair market value can be taken as the cost. But for this purpose, you have to write a clear note that explanation officer has to take the authority and permission from the higher rank authority, and this adjustment can be done only if it is established that assessee has overinflated or taken this particular cost with the intention to reduce the tax liability. So if that is established, and only then this particular adjustment in the hands of Mr. Y, so the cost will be taken as 2,50,000 only. So Mr. Y will get depreciation only on 2,50,000 rupees on this particular situation. Is that absolutely clear? Okay. So 2,50,000 minus the depreciation. Again, I think it is somewhere in January, so half the rate. So 2,50,000 multiplied by half multiplied by 15%. Okay, this is going to be 18,750, and the closing WDV of Mr. Y for that particular year is going to be 231,250. Okay, and for Mr. X, it is anyway sale price. Sale price is not going to get altered. So anyway, the block is going to become negative. So 42,500 negative figure. So this will be straight away charged to the capital gains, deemed short-term capital gains. So year number 2 situation is over. Mr. X is brought to tax, and Mr. Y is getting cost benefit only for 2,50,000. Okay. Now, why uses the machine for his business purpose? Now, this use for business purpose is also very important, because then only depreciation discussion and all that comes into picture. Y again transfers to X on November 15, 2014. So November 15, 2014 basically means previous year 14-15. Okay, previous year 14-15. Okay, so in the next year, that means the year number 3. Okay, for Mr. X, now opening WDV is 0 only, because he is already sold. Okay, so he is acquired that particular asset for price how much? Let me check. 10,000. But this is a reacquired price. This is a reacquired price. Okay, and when it comes to Mr. Y, his opening WDV was 2,31,000. And from that he is selling it for 3,10,000. So again, for him it is going to become profit. So 78,750 is again going to be a deemed short-term capital gains for Mr. Y. So Mr. Y story is over. Now for Mr. X, what will be the cost? He is reacquiring the assets. Okay. So for that, explanation number 4 will come into picture. It is a situation of asset reacquisition. Okay. Now, if the asset has been reacquired, once it was belonged to the assessee and now you are reacquiring that particular asset, in that case, the actual cost to him will be, okay, the cost is reduced by the depreciation actually allowed to him, okay, and the depreciation that would have been allowable to the assessee, okay, it is to the assessee, or the actual price for which the asset is reacquired, whichever is less. Okay, so actual price at which he has already reacquired is 3,10,000, that is ready-made printed to us. And how much is the depreciation which was actually allowed to him, or that would have been allowable to the assessee? So assessee is our Mr. X now. So our Mr. X, whatever was the price at which it was first acquired was 3 lakhs. And in the first year, the depreciation that was given to him was 22,500. And it is 2,77,500. This much only Mr. X has got. This Mr. X had got the depreciation in the year number 1. Okay, so what was actually allowed to him? So 3 lakhs minus depreciation, that because in year number 2, he did not get any depreciation because year number 2 he had sold it to Mr. Y. No, so in the year number 1 only he got this much of depreciation. So the price minus amount actually allowed to him is going to be 277,500, or the price at which it has been reacquired, whichever is less. So whichever less is 277,500 is going to be the cost of that particular gentleman so acquired, or 277,500, whichever is less is going to be the cost. So 277,500 is the cost on which you have to calculate the depreciation for the year number 3 in the hands of Mr. X.